So this is a very common question in depreciation chapter of your accounting syllabus. Okay, so this is the format for this account. Here it is a traditional T account ledger format. So here we have three columns: date, detail, dollar on the debit side, same date, detail and dollar column on the credit side. Okay, so if you want to insert a folio column here and here, it is also okay, no problem. So today we will complete this account by following a question. Okay, so let us have a look at the question on the screen. Amina started a business on 1st September 2018. On that date, she purchased equipment by $12,200 on credit from Bashir Supplies. Okay, she purchased additional equipment by $9,200 on 1st May 2020 and paid by check. Amina decided to depreciate equipment at 15% per annum using a straight line method. The depreciation was to be calculated from the date of purchase. No depreciation was to be charged in the year of disposal. Okay, so here she has new business. She started business on 1st September 2018. Okay, and she purchased an equipment on that date, and later after 1 year she purchased one more equipment by $9,300 on 1st May 2020. Okay, now we'll see what is our requirement on the question. Write up the equipment account and the provision for depreciation of equipment account in Amina's ledger for each of the year ended 31st August 2019 and 31st August 2020. So here we have to prepare this provision for depreciation account for 2 years. Okay, 2 accounting periods. Okay, very good. Will be challenging, but if you understand, will be quite easier. Okay, very good. So first of all, we'll write here provision for depreciation of equipment account. Okay. Now what to record here in this account? Where do we write depreciation? We write in the income statement. Which section? In the expense section of the income statement. Yeah, okay. So first of all, we will calculate the depreciation for these two assets. One is purchased on 1st September 2018 and one is purchased on 1st May 2020. Okay. So then we'll write this depreciation here in this account. So don't forget, we have to prepare this account for 2 accounting periods. Okay, one by one. So first of all, we'll do for 2018 2019. Okay, so point to be noted here, her business started on 1st September. Yeah, it is 1st September 2018. Okay, so what is the year ending for this period? It will be 31st August 2019. Yeah, it is one accounting period. Then what about another one? Another one will be 1st September 2019 and will be ended 31st August 2020. Okay, many students do not understand this accounting period. So if you do not understand accounting period, when you calculate depreciation, you will have mistake. Even when you balance here, when you write balance CD, balance PD, you will have mistake to write the date here. Okay, so this should be understood properly before we start doing this one. Okay, so you know accounting period means 12 months in a year. Yeah, so here we have 12 months, here also we have 12 months. Okay, now let us have a look at the questions once again. Here it is written that 1st September 2018, Amina purchased an equipment by $12,200 on credit. Okay, on credit or cash, whatever it is, this is not our headache as we are doing equipment account. Okay, by the way, we completed equipment account means asset account, so I'll recommend you to watch that video. Okay, so you can understand properly. Okay, then you can come back here. Okay, very good. So 1st September 2018, she purchased an equipment by $12,200. Okay, so in the question it is written that Amina follows straight line method. That means every year the amount of depreciation will be same. Yeah, okay. So what is the rate of depreciation? It is 15%. Yeah, So if we calculate here, what you get, it is $1,830. Okay, so here we do not have any opening balance, so we will not write here balance BD. Why? It is a new business. She just started business on 1st September. If it is an old business, there must be provision for depreciation, and provision for depreciation has credit balance. That means the balance BD will come on the credit side, which is an opening balance. Okay, so here we do not have to write opening balance as it is a new business. Okay, so here for first year we calculated depreciation for 1830. What is the first year? First year is here 1st September 2018 to 31st August 2019. Okay, so one more question, why does a business calculate depreciation at the end of the accounting period? Yeah, so what is the ending of the accounting period? It is 31st August 2019. Okay, so here we calculated depreciation $1,830. This amount will be taken to the income statement at the last of the accounting period. Okay, so here we will write income statement on the credit side. Okay, so let us write here date first 2019 August 31st. Okay, so we will write here income statement. Question, why income statement? Because we will take this amount to the income statement as an expense. Okay, so here the amount is 1830. We will write here $1,830. Okay, this is an expense for the business, and this expense is taken to the income statement, so we wrote here income statement. Okay, so if you think that the adjustment journal for this transaction, yeah, it is income statement to be debited, provision for depreciation of equipment account to be credited. We are doing provision for depreciation account, it is credited, we record it on the credit side. Yeah, very simple to understand. Okay, now what to do? Now you have to balance it. How to balance it? It is quite easy. So you have to first add this column. Okay, so let us add. So here we have only one item, so we have nothing to add. So here just one item we have, so let us write this amount here, just total this amount, it is 1830. Okay, so we will take this amount here on the debit side, means opposite side, 1830. Okay, now here we have 0. Yeah, so 1830 minus 0 equal to 1830, same amount. So let us write here $1,830. Okay, so this is the closing balance, means we will write here balance CD. Yeah, CD means carried down. Okay, so date for balance CD is same date like this, 2019 August 31st, means the date for balance CD will be always the last day of accounting period. Last day of accounting period for this business is here 31st August 2019. Okay, so here now we have to bring down this balance. Yeah, it is written on the question, it is a requirement, so we have to bring down. So how to bring down? So now balance CD is on the debit side, we will go to the credit side. Just below the total we will write balance brought down, means here balance BD means brought down. Okay, same amount, $1,830. Okay, you know the next accounting period will be started on 1st September 2019. Yeah, so we will write here 2019 September 1st. So you can remember this way that balance BD's date will be the first day of the accounting period, and for balance CD the date will be the last day of accounting period. So here we made entry, we wrote balance PD. Now we have to calculate depreciation. Okay, for next accounting year, which is 1st September 2019 to 31st August 2020. Okay, so our depreciation method is straight line method. Okay, for second year we already have this asset. Okay, so this asset value is here 12,200. $200 times 15%, it is $1,830. Okay, so this is our depreciation. But question is, one more asset is purchased when on 1st May 2020, between this financial year, between this 2019 and 2020, okay, and it is purchased by $9,300. From 1st May 2020 to 31st August 2020, how many months? It is 4 months. How? May, June, July, August. That means the business has to charge depreciation on this value $9,300 for 4 months, because business used this equipment for 4 months for this accounting period. Okay, now how to calculate? Same way, we'll write here $9,300 multiplied by the rate of depreciation is 15%. Okay, so we'll calculate for 4 months. Okay, let us divide by 12 and multiply by 4. Now if we calculate, what you get? Well, if you say it is $465, you are correct. Okay, then for this year, for this 1920 accounting year, we have two amounts of depreciation, which is 1830. Another one is 465. 465 for new equipment, and this 830 for old equipment. Yeah, very good. So again, the same thing. These two values will be taken to the income statement as an expense for this period 2019-2020. Okay, so we'll write here the date first. The date will be the last day of the accounting period, which is 2020 August 31st. We will write here income statement. Okay, here we have two values. One is for 1830. Okay, again we have here income statement with the same date. It is 465. Okay, two values. Now again you have to balance it as it is a requirement in the question. Okay, how to balance it? Same way like previous year, we have to add this amount here. So if we add these amounts, what you get? We get here $4,125. Okay, now we'll take this amount here on the debit side. Okay, so let us write here $4,125. Here we have 0. So this amount minus 0 equal to same 4,125. And what is this amount called? It is balance CD. So let us write here balance CD means the closing balance. Okay, so the date for balance CD, already you know, it is the last day of the accounting period, which is 2020 August 31st. We are required to balance bring down. Yeah, how to bring down? So go to the opposite side, come below the totals. Here we write balance BD means brought down. So it is same amount 4,125. Okay, and you already know that date for balance BD is the first day of accounting period, means next accounting period. So here 2019 and 2020 is over. So next period will be 1st September 2020 to 31st August 2021. So here we will write 2020 September 1st. Okay, this is the opening balance for next financial period. So this is how you have to prepare provision for depreciation account if we have several financial periods.